All right, we have a lot to talk about in the housing market update this week, and stay tuned to find out what state is the most expensive state to retire in the United States. There's no surprises there, but I guess my next question is, what is the least expensive state? All right, so let's get going. The big three. All right, prices are steady. Inventory is still going up. And rates are actually up this week. Hope is not a course of action, people, and rates actually went up this week. So we got one yellow, one green, and one red. All right, let's get into the headline news. We got U.S.-China tariff standoff over. It's over, at least for 90 days. And, oh, man, the stock market loved that. Inflation continues to drop. We had a couple big inflation reports come out this week. Homebuilder sentiment tanks. Ooh, it was ugly. All right, it makes me hurt. In Hawaii. Oh, dang it, I let it go. But let's talk about, guess which one is the least expensive state to retire in. Maybe you want to go live there. I'll take Hawaii all day. 6 days a week and twice on Sundays, baby. All right, mortgage rates were up slightly, so we'll get into that as well. We had a very successful meeting with the Chinese led by Secretary Bessent, and we came up with a 90-day pause, or 90 days of tariff cuts, and they were lower across the board pretty bigly. U.S. tariffs down on Chinese goods dropped from 145% down to 30%, and Chinese tariffs on U.S. goods dropped from 125 to 10%. So we got 90 days, and then we will, who knows what's going to happen, but the 90 days gives both sides, economic teams, some time to really come up with a tariff plan that is going to be amenable to both countries and not really hurt each country and be a little more fair. So stock market erased all of the losses from Liberation Day and is now above where we were before Liberation Day in April. And man, I tell you what, it wants to go higher. And when the stock market goes up like that, guess what happens? Interest rates, they go up as well. And that's what we saw this week. All right, on to inflation. CPI, the Consumer Price Index, that is the first big inflation report of the month, came out. And April CPI dropped down to 2.3%. That is the lowest inflation rate in the last 4 years. Basically, since the Fed lost control 4 years ago. The core was steady at 2.8. And one of the things that I noticed, or certainly folks are noticing, is the annualized core run rates. The 3-month is down at 2.1%. The goal for the Fed is 2%. We're at 2.1 the last 3 months, a little higher 6 and 12 months, but still encouraging. You know, one of the things you got to take into account on this is the impact of the tariffs from Lib Day until now probably isn't going to come into effect until, May or June, especially considering a lot of companies are withholding that pain going to the consumer, which is us. Now, we also had the PPI, which is a producer price index. That's a wholesale report. That came in cooler than expected, minus 0.5% versus 0.2% that was expected. And the core was much cooler. It came in at minus 0.1% versus a 0.4% positive that was expected. And the other thing, this report comes from the Bureau of Labor and Statistics. And the other thing that really kind of hurts this report is the negative revisions, or the revisions period, big time revisions to last month, to March's report, which really gives us a little bit of question on the validity of these numbers. All right, and then, it's interesting, on Thursday, you would think with a great inflation report like the one we got on the PPI that interest rates would go down. Well, CNBC, they did not report a 0.5% decrease initially. They reported a 0.5% increase in overall PPI inflation. So stocks market actually kind of went down, and then it came back as the day came on when CNBC corrected itself, but it put out the wrong information. Not a knock against CNBC. I'm still going to watch it. I'm still a big Jim Cramer fan, but whoops, that was a mistake. Let's talk about Homebuilder sentiment. Just when you think it couldn't get worse, it sure as heck did. All right, how low can you go? All right, home builder sentiment dropped from 40 down to 34. Remember, builders are feeling positive. Anything below 50, the builders are feeling negative, and they are really negative right now. Buyer traffic down from 25 to 23. The future sales expectations down from 43 to 42, and current sales expectations down from 45 to 37. What is causing their sentiment? Well, why are they down in the dumps looking like Eeyore out there? Well, it's economic uncertainty. You got continued high inflation, high material costs, and then tariff fears. When this report was being tallied, we didn't have the results from the China-U.S. Tariff talks this weekend, but it's just still the builders they're not happy campers right now, people. And the other thing with the buyer traffic, it's the higher rates. All right, this is the time of the year when buyers should be out, man. They should be out buying. They're getting ready to move. They're just not getting off their butts, getting off the bench and getting out there. So home builder sentiment in the dumps. It may go up, but it ain't gonna go up much. We really need costs to go down for them. We need builders to go. They need the manpower, and they need to be certain that the economy is gonna recover. So not a very good report there. And now, the most expensive state to retire in is Hawaii. All right, at 1.097. And now this is the number. This is from the Entrepreneur magazine. I think it's the Nerdist did a lending company did this poll, and this is the amount of savings needed to comfortably retire in whatever state it is. And the formula they use is 15 years, which they believe is the average length of retirement from the time you retire to the time you die. 15 years, and then multiply that by the state's cost of living, and then you increase that amount by 20% for a comfortable, quote unquote, comfortable retirement. All right, so the least expensive state to retire in, all right, which one is that? Well, it is, which one is it? You know what? I don't want to live in any of them. All right, it is West Virginia, West by God, Virginia, and Arkansas, and North Dakota. All three of those states actually are the least expensive states to retire in, and nothing against those states, but I wouldn't retire there. And you know what? Even though it's the least expensive state, you still need $700,000, over $700,000 to retire comfortably. All right? Now, let's kind of take this back to people's net worth. How much money do people have? If you're a renter, all right, the net worth of renters is about $30,000, maybe. I think it's actually, $10,000, right? But if you're a renter, you're never going to retire on average, all right? But those people who own homes, their net worth is over $300,000, and people who own homes typically have other assets as well. So again, that's the first step to really building wealth is home ownership. All right, let's look at the $1 million states. There are three of them: Hawaii, California, and Massachusetts. What do those three states have in common? I'm not going to say anything, but they're all over $1 million. The entire West Coast is over 900,000, and if you look at the Eastern Seaboard, the entire Eastern Seaboard is over $800,000, or is the amount of savings needed to retire. It's not cheap to retire anywhere, all right? Not anywhere. So that's what that's telling me. Yeah, you know what? You can retire if you don't have that large amount of nest egg to cover retirement. You're going to be in a hurt locker. Now, this report, there's a couple things about this report that certainly have me questioning. It is based on certain numbers, but it's not. There are a lot of variables that are not taken into account here. For one, pension. Do people have pensions? Now, our baby boomer generation, they all have pensions. They worked in jobs for 20 years, 30 years. Gen X, millennials, there's no pension for many of them. Unless they served in the military for 20 years. Social Security, that's not really taken into account. Retirement savings, not necessarily taken into account. Insurance, if you have whole life insurance, not taken into account. But all of those really will impact that final dollar amount that you're going to need to retire comfortably in each of those states. That's a good report. You know what? This is a report that should generate some questions. And if you are starting young, don't put off saving now. Don't put off investing now. Don't put off buying a home now, because when you get older like me, you ain't got a lot of time to make up that difference. So you got to work a lot harder in those years when you should be out being retiring and going on trips. You don't want to wait till you're 80 to go to Europe, right? So this should be a wake-up call, really, to anybody who really wants to retire at some point, whether it's 55, 65, 75. You got to have some money in the bank. All right, let's talk about VA rates. All right, rates started out, you see that steep line up on the right of that chart? Well, that was Monday, Tuesday, Wednesday, and you see the little dip on Thursday. We're about 6.4% for VA. We're teetering right around 7% for conventional. Came down a little bit today. Last thing I'll talk about rates is, the Fed chair spoke this week, Fed Chair Powell, and he's not really giving any encouraging news to anybody who is thinking they're going to lower the Fed funds rate. Basically, what he was talking about was, changing some of the dynamics, maybe changing what some of the metrics will be for an affordable or a comfortable inflation rate. But really, the overall gist of his talk was to say, you know what, we're probably not going to lower the Fed funds rate. And who knows? Now, there's every month they change their tune a little bit, so we'll see what happens with next month's Fed meeting. All right, and finally, what does this mean? Well, mortgage apps were up last week. Despite interest rates going up, they were up, not a lot. It's 2%. It would be more. This is the time of the year when people are getting ready to move. They're preparing to move. They want to look at buying. So you typically see a lot more applications, but you're not seeing them. Obviously, refinance apps are down with this spike in interest rates. Interesting to note, though, people, government loan applications are up 40% year over year. That's both FHA and VA. The government loans are carrying the day right now. And for buyers in Oahu, the inventory in Oahu is the highest it's been in 10 years. So when is the best time to buy? When you have the least amount of competition and the most amount of options. And right now, certainly on the west side of Oahu, you have those two things working in your favor. All right, for sellers, hey, the spring selling season, the summer selling season starting a little late. All right, I would say, it should be starting. We should be in full effect right now, but I don't really see that. Maybe June. All right, but I do see more applications coming in, certainly in my queue. And for sellers, stay positive. You're going to have to give lender credits if you want to sell your home right now or lower your price. But really, to make the home affordable, you're going to have to do seller credits. If you are a homeowner and you bought in the last 2.5 years and you're coming up for orders or it's time to move and you're trying to figure out, do I sell my home at a loss or do I rent it out? You know what? Talk to me. All right, I'll run you some numbers and put you in touch with the realtor who's a specialist in your area, and we'll kind of help you figure out what the best decision is for you. But the bottom line is don't give up. Don't ever give up as a homeowner. All right, there are a lot of people who did that 2008, 2009. They did foreclosures, they did short sales, and it takes a long time to recover from those. And if you could just suck it up a little longer, all right, maybe endure, paying some money out of pocket for a year or so while we do wait for rates to come down, then you'll be in a good position later. That's all I have for you this week. You have a great weekend. Talk to you later. Aloha.